On investment philosophy, let us all welcome COL Chairman and Founder, Mr. Edward Lee.
Good morning, good morning. So are you guys scared already of what Juan has just presented? Takot na ba kayo? Di pa. That's good. Okay, before I go to my topic, which is how I tackle this volatility that's going on. I've been doing it for so many years, so I'll try to share with you what are the strategies that I've been using and how I shared it with our community. I'll try to summarize what Juanes and April presented. If you look at what April presented, what she's saying is that we're at great valuations already. We're at great values already. But if you look at it from the technical point of view, it's parang nag-uumpisa lang. No? So these are the challenges that we have. Fundamentally, we're positive, very positive, because we see values already. And technically, we see some problems happening in the world. And then the major question would be, can we really decouple from the global sell-off that's happening today? You remember, I don't know if I did a presentation a couple of months ago, and I talk about the movements of 10-year U.S. Treasury, the movements of the U.S. 10-year Treasury. And what we're seeing is that when from 3.3 down to 2.5, 2.6, we see market rallying. But today, there is a change. From 2.7, it went down to 1.4, 1.5, the U.S. Treasury. And that created what they called a flight to safety. The major $220 billion global funds from equities, they transferred to what they called the flight to safety to, like what April showed, what Juan showed was gold, and all that. I think April showed that. It's really the gold and the bonds, no? The 10-year bonds. So from 2.7, 2.8, went down to 1.4, 1.5. That means most of the corporate bonds that you bought, locked in at the higher price, this year is outperforming all asset class. It's really the bonds. The bond prices have gone up so much. So I think the biggest challenge today is, what do we do? Do we listen to April? Mura na. Or we listen to Juanes? The sea wave is coming. The sea wave is coming. Okay, so what I'll try to simplify it for you. Kung naipit ka na, huwag mo na ibenta. Kung nandiyan ka na, huwag ka na magbenta. All right? So please don't get confused. All right? Kasi you're buying values already. We're at its value. Tapos magbebenta ka pa, magka-cut loss ka pa. Please don't do that. Just take the dividends, wait for this storm to finish. The storm, by the way, is not in the Philippines. It is outside. This global slowdown is outside. And that's the reason why the 10-year U.S. Treasury went down a lot. Okay? So just in one word, if you're already in there, hang in there. Right? And just let this storm pass. Remember, 2008, 2009, it was the same thing. Right? We're seeing interest rates from 0.25 Fed went up to 2.5 for the last 5 years, right? Because of the policy-driven policy that was created in the U.S. In the Philippines, it's the same. We're growing at 5-6% GDP growth. It's a race to zero in terms of interest rates. And before, I would always ask April, I said, are we not supposed to adjust this risk-free rate or all these, because as interest rates goes down, where should be the money going? Today, we have equity cash dividend yields that are higher now than our 10-year Treasury. There should be a movement already. Eventually, after when everything is so cheap in terms of interest rates, money will flow back to equities. All right? So this whole year, $220 billion went out. In the next couple of months, Pag walang problema, babalik yan. It's gonna come back to equities. Okay? So please, like I said, kung naipit ka na, pareho na tayong ipit. Okay lang. Alright? Okay? I'll give it to my... Kakainis, no? Okay. Alright. This is what we call the investor's journey. I've been doing this for so many years. And what I did was I classified already. If you are children, grandchildren, since most of you are mostly my age, I'm sorry. What we call passive investing. Very simple passive investing lang yan. Okay? Save, invest, reinvest. You need to believe in the Philippine growth story. Just buy the index funds continuously. So for young people, you're starting, the habit of setting aside 10, 20% of whatever you make, 50 pesos, 100 pesos, whatever, tuloy-tuloy lang ang investment program mo. You need that. Alright? You need that. Parang nagtatabi ka lang ng pera. Kailangan yan. In fact, let me share this with you. I was asked to speak in the Institute of Internal Auditors. So I was presenting. I said, why did you invite me to speak? I don't understand what your business is all about. It's about 80 companies inside there. Then I said, Mr. Lee, just share your experiences in terms of how you manage your risk in investing or how you manage to build COL after 20 years. So I explained that. It's very simple. I had only 5 slides. And I shared with them. My ending was very simple. You are the biggest risk if you don't start doing all this investment program. Because 20 years from now, can you really say that you do not burden your children? You understand? So now you need to take care of yourself, because if you don't take care of yourself, 20 years later, you're the biggest risk. Because your children will abandon you. Because you're a burden. You're trying to understand it. So please, remember that carefully. You need to take care of yourself. All right? So very simple. It's a very simple program. Save, nagtatabi ka, maski na walang nangyayari sa stock market, tuloy-tuloy lang yan. Tuloy-tuloy lang yan. Right? Save, invest it in most of these companies that are happening today, believe in the Philippine growth story, and then reinvest it so that let money works for you. Please do not spend it. The problem with most people, like even my driver, I was sharing this. Ang laki na ng kinita niya. Uy, may pera. Bumili ng motorcycle. Sabi ko, bakit ka bumili? Kasi takes me 2 hours to go to the house. I said, sige, paig ako. 2 years later, may pera na naman siya. Bumili na naman ng motorcycle. Sabi ko, bakit mo binili yan? Sir, kasi may coding. Di ba? So kaya dalawang motorcycle niya. I really don't understand. Kasi pag may pera, gagastusin nila. Please don't do that. Kasi it's very difficult to see the future. That one day, sino mag-aasikaso sa kanya? Alright? So please, for your children, grandchildren, please share this. Start their investment program today. Okay? So there are 3 things here. One is passive investing. The other one is active investing, which you need to incorporate all these things, and I'll explain it to you. And then the last, of course, is the trading side, the active trading side. Okay? So let me go. All right, tapos na ito. Nag-jump pa ako. O, sige. Okay na. All right, so this is what they call investment program, slowly accumulating it over time. Now, I was sharing with Dino that I attended a talk in one of the pension funds, one of the insurance company. And most of the people there basically asked me, Sir, 5 taon na ako nag-i-invest sa stock market. Walang nangyari sa akin. Do you see it? That number is here. 5 years, the market just went sideways. Juan has explained it also technically. Okay? And this is the reality. Sometimes it takes a longer time, because if you look at it from 2008 level, when you start investing in for the last 10 years, you'll probably hit 8 to 10% compounded rate of return. But today, the last 5 years, there's really nothing to do. Then the other day, we invited our speaker for, I think, October 25. It's called For a Richer Life. Please attend it, because it's a Friday, so we need more participants. It's a Friday. It's for a richer life, helping you. So we invited this health guru, which I met 10 years ago. And he said, Sir, totoo pala itong investment program na pinagsasabi mo. Sabi ko, of course it works. Sabi ko, hindi ko naintindihan dati. 25,000 ang linalagay na he's a doctor. It was on my table 1. So I shared with them how this is done, picking not only just buying the index, but also trying to identify companies that are being sold at a discount. Like what April is saying. Murang-mura na, pero mumurahin na siya later on. Diba kasi pag bumaba, mumurahin na naman. Kasi because this can be the one standard deviation, two standard, hindi natin alam. Is sentiment changes, everything change also. Right? And then you get scared because of the expectation. Akala mo, kikita na kaagad. They don't understand that it takes time. It's not timing the market. It's how long you're in the market. It's time in the market rather than timing the market. So there are a lot of investment strategy. That's one of the reasons why I wanted to share this philosophy to you, so that you understand how this is done. Then he said the other day, sabi ko, so anong nangyari sa'yo? The other day, I got 100,000 pesos cash dividend from Cebu Pacific. Sabi ko, okay ka, ang galing mo ah. Paano mo ginawa yan? Tinanong ko pa sa kanya. That's not true. We gave them. What we do is that from time to time, April will come out in the calling the shots. What are the stocks that we like and what are being sold at a discount. So may buying below fair value. All right? So that is what happened. So just now, I was with the Nueva Ecija boys. And they shared with me the same thing. Boss ba ang tinawag mo sa akin? John and Mel. Sabi niya sa akin, it works. First gen, 3 years, continuously, cost averaging it. And then, reinvesting the dividend. It also worked. Because first gen was 2-3 years. It was just going down tremendously. People don't even understand what's happening. Sabi ng COL, 27, bumababa hanggang 30, no? Diba? So continuous cost averaging lang yan. This is the result. It works. Buying good companies, getting their dividends continuously. A lot of people say cost averaging doesn't work. We beg to disagree. So these are the numbers you're seeing. If you find a good company, especially like what April is showing you, all these blue chip companies that you think that are not growing anymore but continues to pay dividends and selling at a huge discount, it really works. Okay, so makikita ba ninyo yung ano? Can you see it? Anyway, you can get this from, build your account to 100 million so you can get this list. No. 1 million na ba? 1 million. Doon kayo kay Ed Martinez kasi 1 million lang. So in other words, so you can see where is the discount. Is it 10%, 15%, 20%, 30%, 50%? And just do this cost averaging. Because we don't know how low it's going to go, right? But if these are real companies that are paying you dividends, you should have that buying mindset. Tuloy-tuloy lang yan. Just pick those issues now. There are three things that you need to understand. It's called environment, the ESG, environment, social, and governance. So those three, if it's inside there, please do not touch it. All right? Do not touch it. I cannot mention the name, but Google it. What is environment, what is social, and what is governance. You need to avoid it. Because all the fund managers in the world uses these three ESGs. May ESG na yan. No? So anything that involves environment, they won't buy that stock anymore. But it doesn't mean that it's not doing well. It could still be doing well, paying huge cash dividend. Right? You can do it also, it's not an issue. But just be careful, because if you expect that thing is going to fly, it ain't going to happen. Right? It might go up a little bit, but then get your dividends and still outperform. Okay? So it's a strategy that we've been encouraging, right? Rather than being excited, putting a lot of money and then trying to time it. So these are the strategy that we have been explaining for the last couple of years. Okay? Buying stocks with margin of safety. All right, I've been sharing this the last couple of months whenever I give a talk. We call it active investing. What is this active investing all about? One is that you need to identify, get it from COL research also, these companies, right? It's called a narrative. You have to look for the narratives. Before I always use about the 4 Ps: people, product, potential, predictable. People, understand the principle. Who are these people? Totoong tao ba yan? 2, anong produkto nila? What product? 3, potential, meaning growth. There's earnings growth. Their business is growing, there's earnings growth. 4, predictable. Hindi kwento lang, kailangan, eventually, you will see numbers. Okay? So look at this carefully. Look at this carefully. It's all about numbers. It's all about narratives. There are pros and cons. If you just look at numbers, like there's a sense of control in terms of numbers. But then they're dangerous also because it's what they call financial engineering. Marami nagmamagic ng mga books dyan. That's why you have to look at them carefully. Right? So it's like great numbers, but indirectly, sometimes they depreciate an item for the next 20 years. Akala mo, maayos sila, yun pala walang cash flow. All right? But the narratives are great, stories. It's easily remember. Di ba? Boss, anong bibilin natin? O, kukwento ko lang siya, bibilin na yan. Right? Rather than there's really numbers. But do your due diligence. You really need to know also what is this narrative. Right? What is this narrative? Okay? So, but the danger is in narratives is pwede kitang bolahin, pero walang numero talaga. Okay? So you need to understand that very carefully. You need to understand it. It's all about stories. It's all about the narrative and about numbers also. All right? Narratives, numbers. Narratives, numbers. That's how we look at it. Second is that we show you what, please, this is from the YouTube Corporate Cycles by Aswad Damodaran. This is from an NYU professor. Right? Please go to the YouTube, listen to him, so that you can understand what approach, what strategy do you use when you're encountering informed specs or what we call startup, young growth, high growth, and as it mature, what strategy do you use? Do you use understand that most of our companies that are listed are mature growth, mature stable, or also declining. So you need to understand all these companies. Kailangan basahin din niyo ano nangyayari. Because if you don't understand each and every one of them, then you will just be buying blindly, which is not what we want. We really want to educate you as much as possible so that you have that informed knowledge. And then when prices are being sold at a huge discount, then you want to be participating, like Juan showed you a while ago. Right? When there's huge capitulation, you know what is the fair value, what is that being discounted, then you want to be participating. But also you have to understand, since it's a mature company or it's a declining company, you need to sell it. You need to sell it. So these are the strategies: buy high, sell higher, buy low, sell high. All right? So what I did was, I also summarized it. This is basically the different companies that we put in. So if it's wrong, please blame Charles, because it was produced by April's assistant. I'm joking. Just look at those companies well. Anyway, this will be provided to you in the slides. All right? So what I did is simplified. If you're buying a young growth company or a startup, you need to use a buy low, sell high approach. Buy low, sell higher approach. Right? So it's like what we call trend following. Right? But also remember that you need to get out, because if you don't have the proper set of rules, proper rules, you will just lose money, because these are startup and prices can go down a lot. Right? So those are the things that you need. But if you are buying a mature growth, mature stable, and they're being sold at a huge discount, it's capitulating, you want to be there also. You want to be there, because if you're not there, then you cannot take advantage of it. But it's not a buy high, sell higher. Mature growth, mature stable, it's buy low, sell high. Buy low, sell high. If you keep that, then you will do well. Especially in the last 5 years, if you try to buy high seller, you always buy at the top and then magbabenta ka sa baba. So please understand it. So in summary, what is most important is you know the companies you are participating in. Either it's a blue chip or it's a startup. When you're doing startup, please, there are no numbers. Puro kwento lang yan. You need to use technical analysis. That's why we use momentum strategy to be able to understand how to tackle all those issues, right? Because you might love the story, as the prices starts breaking down, you're so in love with the numbers, or so in love with the company that you forgot that these are startup, young growth, that can go down a lot, 30, 40, 50%. All right? So, but if you're buying a company that is mature growth, mature stable, part of the index, you need to have a different strategy also. Okay? Right. In active investing, as what you're seeing today, there are three things that you need to understand. One is the policy-driven policy crash that happened last year from 2008, the whole of 2018, when the Fed is increasing the interest rates. Then next two are what we call, what's happening today between the US and China is what we call a political crisis. A political crisis. What is this crisis? Hindi naman sila nagpapatayan pa. You have to remember, the last 200 years, 150 years, it's dominated by the US. Today, China is really coming up in the world stage already. In terms of technology, in terms of development, we're seeing a lot of advanced technologies coming out of China. So we really believe that what Trump is doing is America first in trying to delay the eventual rise of China. So last night, they also announced that they're discouraging US pension funds to participate in all those companies that are listed in China. So they're doing everything to really stop China from growing. Everything from 5G, from all this cybersecurity, anything that is involved in China that they think that there's a threat. Because you have to remember I think in terms of 5G, the US is 3 to 5 years behind. So you can see that there is a big dark cloud that is happening globally. So we consider the US-China trade war as a political crisis. The beauty about US today is that the economy is doing very well. All-time low in terms of unemployment. Companies are still growing. But sentiment is changing. That's the reason why there was a race to zero, meaning the interest rates early this year from 2.8 went down to 1.5. It's because of margin of safety. The flight to safety. Okay? So understand that. The other problem also is the credit crisis is coming from where? From Europe. Europe. About 2 or 3 months ago, Deutsche Bank decided to close down all the global financial services in the world. So they're also trying to manage their finances. All right, so for the last 10 years, you can see most of the major banks in Europe is at all-time low. It's an all-time low because they did not fix it. 10 years ago, when the crisis came, they continued to just bail out all the banks, and the banks have continued to underperform. Today, at least, they started to wake up and started to close down all the unprofitable businesses already, which is a good sign. So probably it's pricing in already also the problem that they have. But today, I think a month ago, Draghi, the European Central Bank governor, started also to have negative interest rates. So you have Japan, negative interest rates. Europe, negative interest rates. US, down to 1.6, 1.7. Hopefully they don't go to zero, or else, like I said, and I share this with my people, when you have negative interest rates, you're penalizing the saver. Right? Imagine you open a bank, you don't make any money. And then what they want is they want you to do a carry trade, borrow the negative interest rate in Japan and just put it in their banks that pays you 4 or 5%. How many people can only do that? Very few people can do that. So the 0.1% of the people makes all the money, while the 99.9 basically continues to deteriorate because there's really nothing to spend. Because they're not being paid in terms of their bank deposit. Okay? Philippines, 5-6% GDP growth. All this build that's happening will, another 5-10 years will really benefit the Philippines. And you have to remember, the whole Philippines will be benefiting from this already. Right? But can we be decoupled? The answer is no. So temporarily, we will see some volatility that's happening, but we need to be prepared to be able to buy those discounted price so that we can participate in it. There's nothing wrong with the Philippines. Please believe that. This pogo that happened, lumang tugtugin na yan. You have to remember, all these illegal activities that's happening outside, when this administration came in, we embraced China. So all of these are coming in. You have to remember, this pogo thing, or what, not only pogo, there are a lot of other casino operation that's happening here. It's what we call the proxy betting. These are contributing to our economy, 200 to 300 billion. Now they're running after them to pay taxes. So temporarily, all this drop in the last few days of all these companies, of these property companies that are going down, these are the opportunity for us to be able to pick it up when it's time. They're just closing it down, and then they have to pay their taxes. Once they pay their taxes, reopen it. So you have to understand that also. So these are also opportunity for us to be able to identify these companies today that are being sold. These are good companies, paying huge dividends. So these are also an opportunity. The nice thing about the Philippines, we'll have those kind of because of the market is illiquid. So you will see when people are selling, just a big seller comes in now, they'll have to sell at 10, 20, 30% more just to be able to get out. Okay? So understand how this is done. We look at it carefully, right? We're seeing global headwinds. Global headwinds. But as far as Philippines is concerned, the fundamentals are here, are intact. Okay? The last is really what we call the active trading. Right? Active trading basically is the department of Juanes. He will show you what are shares that are in an uptrend and also shares that are being sold. It's called the counter trend. If you are going to be actively participating in active trading, you need to know the rules of the game. I've said that so many times. You need to know the rules of the game. Like what Juanes showed you a while ago, the PLDT chart. You can make money twice doing a counter trend. So in other words, when you know that the company fair value is at 1,300 and it's being sold at 1,100 or 1,000 pesos, huge capitulation. That's the capitulation. That's a counter trend. It's called mean reversion. What is this mean reversion? What is it all about? When people are panicking and selling it on the way down, this indiscriminately, after the finish of the selling, absence of buyer lang yan. Absence of seller, it will rally already. It's called mean reversion. It's just a mean reversion. Similar to when people are being excited and buying it at the high, after they finish their buying, it just goes down by itself. That's called mean reversion. So a counter trend, you need to understand it also. Only use it for companies that have a fair value that is way above the discounted price. Okay? So I think Juanes will be able to share with you that going forward. The only difference is that when it's talk about mean reversion, you need to sell it. That's why it's called active trading. Because if you don't sell it, it will retest. The reason why it's being sold is because of what? Fundamentally, there's probably be a problem, temporary problem. So the mean reversion, if you don't sell it, bumabalik yan. Then it takes a long time before it reverses. All right? So basically the same thing as what happened to Jollibee. Remember? Panic selling, rally. If you did not sell on this rally, now the fundamentals comes in. Right? So these are the challenges that we will see. I think some of you have requested to Jollibee chart. I think that Juanes will show it to you later on. So how we look at it, how we use it. When you're trading, you have to treat it as a business. Negosyo yan. You have to treat it as a business. When the rally comes, you need to sell half because sometimes it will go even higher. Then you say, uy, dapat hinawakan ko o dapat bumili ako ng marami. So those are the things that which you need to learn. There are a lot of things that you need to understand when you're actively trading the market. You have to treat it as a business. Because if you don't treat it as a business, then you'll have a lot of frustrations day to day. So umakyat, ay sayang, dapat maraming binili ko. So, if you sell it, tapos umakyat na naman, sayang, dapat hinawakan ko. Feel nyo? Di ba? Tapos pag bumili ka ng marami, bumaba, ay nako, dapat hindi ko binili. Ang hirap, no? Di ba? Dumaan na rin ako dyan. Kaya alam ko lahat yan. That's why we teach this. That's why we teach this. So you need to treat it as a business. If you're actively, you want to be in the market, please, there are rules, learn it, and you will be fine. Right? Over time, just manage your risk, manage your risk. Okay, so in summary, why do we say it's a value momentum? Right? When prices are going up, and we see volatility happening on the top, but the fundamentals is still good, you have to trade what you see. You understand? You trade, you use a technical analysis to take you out. Because if you don't take it out, when it comes down, ipit ka, wala kang pambili. When the values are there, when prices goes down and capitulating, you have to trade what you think. Yeah, you get it? So ganito na, at the top of the market, you need to be guided. You need to know your technical analysis. You need to know the market timing. You need to know that. When it's reversing, you need to get out. If you don't get out, when that thing comes down, you don't have any more money to buy when it's at value. That's why we need to wear two hats. We need to understand each and every thing that we do. When prices are going to a euphoric, you need to get out. Because if you don't get out, and then when it comes down, you don't have any money to buy. That's why we always have to be careful. Whenever we see a risk on, risk off moving, we will raise cash. So that when it goes down, we have enough money to buy the market. All right? Hope you enjoy the day, please. There's still a lot of program that's going to happen. I'll be around and enjoy the day. Thank you very much.